Global markets turned mixed to positive despite ongoing tensions. Asian equity markets were mostly lower but managed to finish mixed on Monday as Russia continued its advance into Ukraine over the weekend, with investors digesting new sanctions from the West. On Sunday, President Vladimir Putin put his country's deterrence forces on high alert in response to the international backlash to Russia's invasion. The next day, the selling pressure in the region continued to abate despite Russia's ongoing invasion of Ukraine. It looks like Asian investors saw some signs of no immediate escalation after talks between Kiev and Moscow ended with no agreement except to keep talking. In the U.S., stocks trimmed intraday losses to close mixed at the start of the week. Still, the worsening geopolitical crisis makes investors stay nervous, with the Federal Reserve's rate hike plans adding to worries. The tech-heavy Nasdaq gained as Tesla shares jumped nearly 7.5%. On the negative side, shares of Citigroup fell 4.44% after the bank warned that it could potentially take a hit as it had $5.4 billion in exposure to Russian assets at the end of December. On the first day of March, Wall Street equities slid as investors continued to express worries about geopolitical tensions surrounding Ukraine, with rallying oil prices adding to inflation concerns. Financial stocks were the biggest losers in the session, with the Bank of America down nearly 4% and Wells Fargo off 5.77%. Asian stocks fell on Wednesday as oil prices jumped to fresh multi-year highs, with market players expressing worries about the impact of aggressive sanctions against Russia. The United States banned Russian flights during American airspace on Tuesday. The MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.56%, while Japan's Nikkei 225 shed 1.68%. In Europe, stocks closed on a firm note on Wednesday despite lingering geopolitical tensions and worries about the economic impact of sanctions on Russia. The pan-European STOXX 600 climbed nearly 1%, with energy stocks leading the gains after crude oil prices moved up sharply to fresh long-term highs. The European Union said it was excluding 7 Russian banks from the SWIFT messaging system. Sberbank, Russia's biggest lender, said it was leaving the European market as its subsidiaries faced large cash outflows. Its London depository receipts have plunged 99.9% since the start of 2022. U.S. stocks advanced on Wednesday in a broad-based advance after Federal Reserve Chair Jerome Powell signaled that the central bank would likely raise interest rates less than investors had feared. The statement helped alleviate concerns on Wall Street that the central bank would raise rates by 0.5 percentage point. The S&P 500 rose 1.9%, the Dow Jones Industrial Average gained 1.8%, and the technology-focused Nasdaq Composite Index added 1.6%. In currencies, the dollar index extended gains to notch fresh mid-2020 highs, marginally below the 98.00 figure, before retreating to the 97.40 area amid Powell's more dovish comments. As such, the Euro-USD derailed the 1.1100 figure for the first time since May 2020 to notch fresh long-term lows just below the 1.1060 region. Still, the pair came off lows to finish the day above 1.1100 as the dollar demand had eased somehow. On the data front, employment in the U.S. private sector rose by 475,000 in February, while January's estimate was revised higher to 509,000 versus the previous estimate for a 301,000 job loss. However, the dollar does not seem to have reacted to strong U.S. jobs data following Friday's key employment report. Meanwhile, oil prices extended the ascent after the shortest OPEC Plus meeting on record. The alliance has agreed to stick to its existing output plan, which entails 400,000 barrel per day hikes to oil output quotas each month in April. Brent crude jumped to fresh multi-year highs around $115 per barrel before extending gains above the $118 for the first time since February 2013 as geopolitical tensions surrounding Ukraine continued. Asian stocks extended gains after reassuring comments from the Federal Reserve. The MSCI's broadest index of Asia-Pacific shares outside Japan gained 0.4%, extending the recovery from 15-month lows. The Nikkei 225 in Tokyo rose 0.7%, the Hang Seng in Hong Kong gained 0.5%, and the Shanghai Composite Index in China advanced less than 0.1%. Earlier today, the World Bank stopped all of its programs in Russia and Belarus in response to the invasion of Ukraine. Fitch downgraded Russia to B from BBB, expecting further ratcheting up of sanctions on Russian banks. Also, there were reports that Russia is to be deleted from all FTSE equity indexes. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.